Hello and welcome to a fresh new edition of Bazaar Morning Call. I am Prashant. With me, my colleagues Sonia Shenoy and Nigel D'Souza. Guys, hi, good morning.
Morning.
Friday the US markets were down 4% and the market here closed just a third of a percent lower. And I was wondering, last night US markets are down 1%, which means by that relative outperformance, we should be up 2% today, right? Just incredible. The global picture continues to be quite poor. There is no real kind of pullback in that sentiment. Negativity is pretty high. So equities are down 1%. The dollar is strong. We'll talk more about that. But the India outperformance day on day, week on week, month on month is quite remarkable. And TCS has delivered a pretty strong, not very strong, but compared to the gloom and doom, it's delivered a decent second quarter earnings. ADRs, the tech ADRs are up between 2 and 4%. And that could be the sector of the day. This is something we were talking about same time yesterday as well. And yesterday you had the Nasdaq down 4% as we were opening. You don't have that this morning. And you have these numbers from TCS and that a buyback notice from Infosys as well. So that's the other point of conversation here as we begin a fresh trading session. Guys, hi.
Hi, good morning, Prashant. Morning, Nigel.
Morning.
And I think that comes as a surprise, right? A pleasant surprise.
Yeah.
The fact that TCS did not disappoint this time around. And I think the street would take that with both hands. So these are the two big cues today, according to me. TCS's numbers beating street estimates and Infosys buyback proposal that may perhaps keep the market afloat. And as Prashant said, that outperformance that India has seen, perhaps that could continue. So earnings season has started off on a good note. For TCS, I think what stood out is the fact that, A, they did not change their margin guidance for Q4. It's maintained at 25%. They said there's no reason to change their quarterly deal win guidance as well, although they did cite some caution with respect to what's happening in Europe with the energy crisis, and hence there's not much visibility going forward. Having said that, Infosys and TCS together now contribute about 11% to the Nifty, so it'll definitely keep the Nifty afloat despite all the global chaos, right? There's also valuation headroom for TCS. So if you look at the historical valuations on a 2-year average, it's traded at about 30 times and currently at 24 times. So that headroom is available. Having said all of that, I think the SGX Nifty is still indicating some amount of pressure because of what's happening across the globe. The Nasdaq has hit a 2-year low, and very cautious commentary coming in from JP Morgan's Jamie Dimon. We'll talk about that as well in greater detail. But the moot point is that he expects a global recession in the next 6 months and a further 20% downside for the S&P 500. 2 days of selling by FIIs and large selling, might I add, 2140 crores. So it's kind of, I don't know, it's like sort of a seesaw. On one hand, you have good earnings from TCS, the buyback from Infosys. On the other hand, weakness in the global markets.
Weakness in global markets, which is kind of, we seem to be Teflon coated, Sonia, right?
Yeah.
It's just incredible. And that's the point. The texture is trying to buy the dip and trying to hold on to the long side in the hope that the global turns. Even if it doesn't turn, you don't get hurt too much here. That's the point. So the outperformance that we're seeing, what it does is it gives a lot of confidence that, on big down days, big gap downs, you don't want to be, of course, caught in front of a train which is coming super fast at you, but you're not panicky and getting out of positions because of the steady track record of outperformance we've seen through the course of what has been an extremely tough year, globally speaking. TCS is interesting, right? So the Q2 numbers are decent, absolutely. 4% quarter-on-quarter constant currency growth is nothing to be scoffed at in this environment. There is commentary, and I think we'll hear more from the TCS management later. Europe is, of course, a little weak. Long gestation deal closures perhaps need to be watched. This is coming from the management. But the fact is, after this set of results, I think what may happen is that, earnings downgrades on the back of what is to come, that perhaps may take a bit of a backseat. Fresh earnings downgrades. The street may decide to wait for this slowdown that everybody is anticipating to happen and then take a call on what to do with earnings from here. Should they slash earnings more, or it's going to be like what it's been before? I think it will be the latter. People will give benefit of doubt to IT companies, especially after the commentary, which has not been bad at all. I think the bounce may continue. I said this yesterday as well. And as I said, you don't have that headwind of Nasdaq crashing which we had on Friday. It's a more supportive, more constructive environment, although it's been risk-off. Financials continues to be the other kind of hunting ground for opportunities. And you could see that. I mean, IT and banks, especially private banks, were the two areas which continue to be pretty solid. Axis, for example, as a case in point, was up to 2.5% odd. It's a little bit of rotation there as well. For example, HDFC Bank is coming back into the picture. ICICI Bank is taking a bit of a backseat. But that's the area where there is a fair bit of activity. Oil has cooled down a little bit, but just a little bit. I think it's inched up again after selling off last night. So still holding at about 96, but that's better than 90, almost 98, which we had yesterday. Dollar is again well bid. By the way, the US Treasury market was shut for Columbus Day holiday last night. So US market participants were out. I would not give too much credence to the dollar strength. Perhaps today will be a better sort of sense of things. But the dollar strength means that the rupee may continue to weaken. Yesterday, right out of the gates, right at open, when 9 o'clock here, the RBI defended the rupee big time. I mean, they were in the market big time, as Lata was also telling us. Will they continue to do that, try and slow the pace of depreciation? That is essentially their aim, not taking a directional view. That is something we need to watch out for. But we closed at, 82.32, very respectable close. The Nifty, first on the upside, needs to take out 17,421. That is last Thursday's high. That is also the 50% retracement of the entire fall. I'm talking not the entire fall from October last year highs, but the recent fall. And yesterday's low at about 17,064 should act as a good support. That is way off now after the bounce that we had in trade yesterday. So that's the setup for today. IT and financials continue, I think, and IT more than financials, perhaps more bounce there on the back of earnings, what's been reported and what is to come. Nigel, what are you watching on?
Well, the institutional flows first up. We're saying that the FI and the DI, they nullified each other. But the FI gross participation yesterday was 40% lower than what we have seen in the last, couple of weeks or so. One factor that could have played out is that Columbus Day holiday. That could be one. And some of those Asian markets were shut as well. So yesterday's FI sell number actually has come on very, very low volumes. The gross participation was low. The second part is the DIs. They pumped in the big money. They pumped in the highest we have seen in the last 1 week or so. So the institutional number continues to be tracked. That'll be very, very important. Let's see how things shape up today because most of those Asian markets have opened up. And the US markets as well will be back to full strength out there. What are the FIs doing in the FNO market, though? Well, you had one indicator. The futures, it had moved into discount from a premium. That told you there was some short positioning. And that's precisely what the FIs did. They added close to around 14,000 short contracts. And now the short positioning goes to around 82%. Now, the hope is that these short positions get stuck on the wrong side. Where did they add short positions? On the Nifty. Open interest built up out there. But on the Nifty Bank, there were signs that there was some covering in yesterday's trade. And the Nifty Bank, that's the joke on the pack. I mentioned this yesterday as well. You're trying to short the Nifty Bank, you're not making money because from the lows, you're seeing a big bounce. Just take a look at it. Last couple of days, 350 to 500 points bounce is what you're seeing from the day's low. And the Nifty Bank ended closer to around the 50 DMA in yesterday's trade. So if we're looking at levels on the Nifty Bank, well, they as well come up for you on the screen. You like the Nifty Bank to cross the 50 DMA and then move to around that 20 DMA odd. So the IT stocks, they'll kickstart today things in the green. But the Nifty Bank, that's the one that'll have to play a better innings, so to call it in cricketing parlance. Remember, in the last 7 days, the Nifty IT index, well, that's moved up in the last 4 sessions odd. But the Nifty Bank has been the outperformer even on the Nifty. How do you approach trade then? It appears the first level of resistance comes in at around 17,350 because the 17,200 call was very, very active. But the 17,000 put, well, that saw a good amount of addition. So just watch the screen. Those are the crucial levels. 20 and 50 DMA, resistance on the upside, but 16,950 till that level holds out. We have seen in the past that you buy the dip, you'll make money. So why do break that formula? If you get a 150 point downtick, then risk reward could favor you. Global cues, yes, they're a little bit muddy still, but the Indian rupee actually, that stabilized yesterday. So keep an eye out on the rupee. Look to buy the dip if you get a 150 point downtick and hope that what happened in the last few days happens again. Sonia.
Absolutely. I think after all the volatility, that roller coaster ride, the 200-day moving average is intact, right?
Yeah.
So at least that seems to be at least a medium-term floor for the market, that 16,980 level. But a lot of the other technology companies will definitely be in focus today after the management commentary from TCS. So far, what has come through is not too bad. The commentary, that is, TCS says that the annualized attrition has peaked, so the attrition should fall from here on. Even on demand, they haven't given any kind of near-term visibility, but on demand so far, they said that the demand for services continues to be very strong. Of course, they have highlighted caution on Europe and how the energy crisis there could perhaps lead to some challenges in the months to come. But this is the lineup of companies that will be delivering earnings. There's HCL Tech, Wipro, Infosys and Mindtree in the next 2 days. So I'll watch out for these stocks ahead of their numbers. But lots to talk about. We'll have the TCS management in just a while from now, so do stay tuned in for that. Rajesh Gopinathan, Samir Siksaria, Milind Lakkad, all of them will be joining us at about 8:25, so keep it with CNBC TV18. But first up, on the equities front, we have some commentary coming in from Surendra Goyal of Citi, who expects the overall Q2 Nifty earnings decline to be about 10% year-on-year. He expects the margin pressures to start abating across autos, industrials, pharma sector, but significant benefit is likely visible only going forward. He says the key things to watch in the commentary are the festive season outlook, rural trends and the margin outlook. He also says they continue to see risks tilted to the downside in terms of earnings revision momentum, and the valuations remain quite elevated. Surendra adds that the December 2023 Nifty target of 17,700 as a limited upside.
Well, let's get you some money market views as well. This is Bhaskar Panda of HDFC Bank, who says that markets remain nervous as a Russia-Ukraine conflict intensified, and US Federal Reserve speakers repeated their resolve to fight inflation. In this context, forthcoming US CPI data remains important. The dollar index rose overnight, but thankfully oil prices have come down on global growth fears. He expects the dollar-rupee pair to trade in the range of between 82.30 to 82.50 for the day.
All right, and on the bonds, Bhaskar Panda says the benchmark yields have remained range-bound. Lower crude oil prices may help the sentiment a bit. He expects the 10-year benchmark bond yield to trade between 7.45 to 7.50%. Okay, we will take a quick break on that note.